All right, today we're diving into a crypto asset called aPriori, or APR. And honestly, it's a real head scratcher. Just imagine a project with brilliant, game changing technology and some of the smartest money in the world backing it. But at the very same time, it's caught up in a scandal that has just demolished the community's trust. So, how on earth do you value something like that? It's a huge puzzle for any investor, and that's exactly what we're going to unpack today.
And this right here perfectly captures that central conflict. On one hand, you've got an AI analysis platform, Intellectia AI, that's just crunching the raw data and is basically shouting from the rooftops, strong buy. But then, on the other hand, you've got a forecaster, like digital coin price, looking at the bigger picture, the human element, and they see a storm brewing, calling the sentiment bearish. So, who's right? Where's the truth? And this is what that conflict actually looks like on the price chart. I mean, look at this. One day, the asset is up almost 3%. The very next day, it crashes by nearly 23%. That's not just your standard crypto volatility, folks. That is the signature of a market that is completely and totally confused. A battlefield where the bulls and the bears are in an absolute death grip. Which, of course, leads us to the big question. What is really going on with aPriori? How can one single project be so incredibly promising and yet so deeply troubled, all at the same time? Let's start breaking this puzzle down. Okay, so first up, let's talk about the promise of aPriori, the bull case. What's all the excitement about? Well, it all comes down to their tech and this mission they have to democratize something called MEV. So what the heck is MEV? The easiest way to think of it is like a hidden tax on the blockchain. Right now, super sophisticated traders can basically see your transaction coming, and they can jump in front of it or shuffle things around to skim a tiny bit of profit for themselves. It might not sound like much, but it adds up. We are talking about over $1 billion a year on Ethereum alone. That's money that regular folks like us don't even realize we're losing. Well, aPriori's whole idea is to fight fire with fire. They've built this intelligent order flow coordination layer, which is really just a fancy way of saying they built a smarter system. It's designed for the super fast Monad blockchain, and its job is to grab all that MEV before the predatory bots can. And here's the kicker, it's designed to give that value back to the users. And they've actually made it incredibly simple for you. You stake Monad's token, MON, and you get this liquid token back called apeMON. That means your money isn't just locked up and useless. You can go use it in other DeFi apps. But here's the magic. You earn your normal staking rewards, plus you get a cut of all that MEV the system is capturing. All of a sudden, you're getting a piece of that billion-dollar pie that was totally invisible to you before. And make no mistake, this is not some small-time project running out of a garage. aPriori has raised a whopping $30 million. And just look at who's writing the checks. Pantera Capital, one of the biggest names in crypto VC, along with giants like Hashkey, IMC Trading, and Consensus. This is what you call smart money, for sure. And the team behind it all? It reads like a who's who of high finance and crypto engineering. We're talking about former quants and engineers from places like Coinbase, Jump Trading, and Citadel Securities. These are the literal geniuses who built the systems that extract value in the first place. They know this game inside and out. So with that tech and that team, the promise is huge. But with all that incredible promise comes a very, very big problem. So let's flip the coin and look at the other side of the aPriori story. And it all starts with a massive scandal around their airdrop. 60%. Just let that number sink in for a second. 60%. What on earth could that mean? Well, it means that 60% of the entire initial airdrop, the tokens that were supposed to create a big, decentralized community, was snatched up by one single player. On-chain analysts were able to trace the funds to this massive web of over 14,000 wallets, all connected, all seemingly designed just to grab as many of these tokens as possible. Now, here's where a really big problem turns into an absolute crisis. In crypto, transparency is everything. It's the whole point. So you'd expect the team to come out and explain what happened, right? Whether it was an inside job or just a very clever outsider. But instead of transparency, the community got crickets. Complete and total silence. And that silence, it was deafening. The crypto community can be brutal when they feel like they're being kept in the dark. The well-respected on-chain analyst Zach XBT put it bluntly, saying the way they have given zero transparency makes them look no different from scammers. For a project with so much potential, that is just a devastating blow to your reputation. So now we have the full picture. You've got this world-class tech on one side and a catastrophic crisis of trust on the other. So how is the market supposed to price that in? Well, let's dive into the data, because this is where you can actually see that tug of war playing out. It's fascinating. And this battle between promise and peril isn't just a story we're telling, it's a real, tangible force pushing and pulling on the market. You can literally see this tug of war in the technical charts. I mean, just look at this table. It's a complete mess. The MACD, a key momentum indicator, is flashing by. The longer-term moving averages, also flashing by. But then you look at the short-term indicators and they're all screaming sell. And the RSI, which tells you if something is overbought or oversold, is just sitting there right in the middle, totally neutral. The market literally has no idea what to do. And what happens when a market is disconflicted? You get pure chaos. We're talking about absolutely insane price swings. At one point, the price moved almost 67% in a single day. During one sell-off, the trading volume just exploded, surging over 289%. This is the market at war with itself, trying to price in two completely opposite stories at the exact same time. So this all brings us to one final, and really one crucial question. When you strip away all the noise, the entire future of aPriori seems to hinge on this single conflict. And this slide really says it all, doesn't it? The bull case is undeniable. You have an all-star team, truly innovative tech, and a central role in a super promising new blockchain. But then, the bear case is just as powerful. Community trust is in the gutter, the team won't talk, and there's this massive pile of tokens out there that could be dumped on the market at any moment. So, as we wrap this up, the question I want to leave you with is this. In the world of crypto, which force is actually stronger? Can groundbreaking technology eventually overcome a complete collapse of trust? Or is trust the one thing that once it's gone, you can never really get back? For aPriori, the answer to that question is going to define its entire future.